Good evening, everyone. I hope my screen is visible and I'm audible too.
Yes, you are, Dheeraj.
All right. Thank you, sir. All right. So, guys, for your convenience, as Anil sir have informed that we have kept everyone's mic on mute so that we will not get the background noises, right? But you can leave your questions and queries in the chat box, and our team will take care of that. All right. So let's start today's session. So, guys, today's session is a demo session of our 1 month online HR training course. In this course, we provide 3 modules, right? These modules are, first one is the statutory and the legal compliances, in which we cover up the major labor laws of India. These are Provident Fund, ESIC, Payment of Bonus, Payment of Gratuity Act, Maternity Benefit Act. So we focus on the major practical working areas of all these statutory and legal compliances. Second module is the compensation and benefit, in which we discuss about the CTC structuring, understanding their components, understanding of what is CTC gross and net salary. We do the live payroll management, income tax calculation, professional tax, labor welfare fund, loss of pay calculation, overtime payments, leave and holidays, full and final settlement. We all these things we do on the practical basis in the module 2, that is the compensation and benefits. Third is the recruitment selection. Again, we focus on the practical working areas of the recruitment selection as well. We know what is job description specification, how to design them. We discuss on the sourcing strategies. There is a live training on the Naukri.com and understanding the sourcing skills, screening methodologies, mass mailing and job postings, LinkedIn, ATS and RMS, getting a knowledge of the social site for the recruitment from where we can look out for the candidates. Then we have a session for CV writing and interviewing skills. Right, this is for the module 3, that is recruitment and selection. So for this practical training course only, we have conducted this today's demo session. So before moving to the main content of today's demo, let's have a poll here. The question is, how much experience do you have in HR? So you just need to provide your experience range just to have an understanding the kind of audiences we are having today. Right. So I'm just launching a poll. Please share your inputs for this. So the poll is live. You can share your inputs. You need to answer if you are experienced or if you are a fresher. You need to answer that. Okay. All right. So today we are having around 72% freshers. Rest are the experienced. Thank you so much for providing your inputs, guys. I'm just ending this poll and moving forward. All right, so guys, today's topic is compensation and benefit management, right? In this today's demo session, we will understand what is compensation and what are benefits. Then we'll understand how it is designed and what are the components which becomes important at the time of designing the compensation and benefit structure. Then we'll do the understanding of the actual offer letters, some of the actual offer letters, and we'll try to understand the annexures of those offer letters and their importance, right? That these are the actual offer letters issued by some of our clients to the candidates. Then we'll do a live CTC and Excel preparation that would be on Excel, and using all these CTC concepts, we'll do this. So this will be the process we will be moving forward today. So again, there is a poll related to the topic of compensation and benefits. So there is a statement. The statement is net take-home salary of all employees getting a CTC of 10 lakhs in 10 different companies would be same. Is this statement is true or false? You need to answer that, right? So I'm just launching the poll again, and you guys can provide your inputs. The poll is live now. You can share your input. The question is, net take-home salary for all employees getting a CTC of 10 lakhs in 10 different companies would be same. If this statement is true or false, you can share your inputs on this. Okay. All right, so we have got 80% of votes till now, in which 91% are saying it's false and 7% are saying it's true. All right, yes, guys, so the statement is false. The CTC of 10 different employees cannot be same. It will always differ from employee to employee depending upon their pay scale, experiences, and all. Now let's close this poll and move further. So let's understand what are compensation and benefit. What is compensation and benefit? So compensation is defined as the total amount of monetary pay provided to an employee. It is the money given for the work. So any amount, any payment which we make to our employee in form of money is known as compensation. So whatever salary we are paying to an employee is compensation because that is paid in the form of money. So whichever includes money in the payment is known as compensation. It is the money given for the work to the employee. Benefits. All non-financial form of compensation offered in addition to the cash salary is known as benefits. Benefits are the facilities, extra facilities, and other benefits given by the companies to their employees over and above, in addition to their salary, in excess of their salary. That is not the part of their compensation package, but it is over and above the salary that the company is paying. These benefits can be medical insurance, life insurance, health insurances, dental insurance, or any other kind of extra benefits that the company is offering to the employee. So there is saying that benefits have no direct effect on employees' performance. However, inadequate benefits do contribute in the lower satisfaction level. So it means that even if we are providing so many benefits to our employee, it will not assure that their performance will increase or their satisfaction level will increase because of that. But if we do cut down any existing benefit or we do not give any of them, will surely lead to a lower satisfaction level of an employee, right? So that is why benefits are also important as the compensation, right? So benefits are also equally important as the compensation are important. So we'll understand the components which included in the compensation and benefits. So first understand the components which are included in the compensation. The components included in the compensation are the basic pay, allowances, commission incentives, overtime pay, bonus profit sharing, stock options. So here the basic pay. Basic pay is the major payment which is done in the compensation package. This is the main salary of the employee. Then we have allowances. Allowances can be of different types. This is mainly to meet the expenses, other expenses of the employee, which is related to the company's work. So allowances can be travel allowance, meal allowance, housing allowance, medical allowance, and there are many n number of allowances which are available. We will discuss in detail in the coming slide. Then there are commissions and incentives also, which can be the part of the compensation package. There could be overtime pay, bonuses, profit sharing, and the stock option. So all these components includes money. So that is why they are the part of compensation. Then we have benefits. Benefits can be holidays, leaves, welfare facilities, cafeterias, infrastructure facilities, rewards and recognitions, insurance, medical, retirement benefits, and there are n number of benefits which are available and are being practiced under a company. This is mainly depending upon the company's policy, that what kind of benefits they have decided for their employees, for their company. So this will differ from company to company, right? There are some other benefits also that are being practiced under their organization. These are the health insurance, dental insurances, life insurances, retirement plans, gym fitness, vision care, personal leaves, sick leaves, child care, paid leave, etc. And there are n number of benefits which are available. So like I said, benefits are mainly picked up by the companies depending upon their requirements. So this differs from company to company. But compensation is something which normally all the companies follow in the same way, right? So benefits, we are going to stop it over here only on this slide only, and we'll move with the compensation. So
Yes, though your voice is clear to me, but few people are complaining that your voice is slightly low. You need to be slightly louder.
I'm loud enough, sir. I think they're
Okay,
having some
okay,
issues with
fine.
their.
Yeah, it is okay with me, but
All right. So how the compensation and benefits are decided? How do we decide that what amount of salary should be given to an employee? What are the factors which become responsible at the time of deciding the salary of an employee? Let's understand that. So the factors which becomes important at the time of deciding the salary and the wages of an employee. The very first factor is the minimum wages decided by the state government. Right. So whenever you are deciding the salary of an employee, always check out for the minimum wage of that state government and minimum wage for the scheduled employment. You need to check the employment category as well. Employment categories such as the unskilled employee, semi-skilled, highly skilled, or the skilled employee. So always check the minimum wage first at the time of deciding the salary of the employee. Then there are other of that state for previous 5 or 10 years. Then it also depends upon the labor supply and demand of that specific workforce or scheduled employment, you can say. It also depends upon the labor unions and industry. So all these factors plays an important role at the time of deciding the minimum wage of the state as well. And paying below minimum wage is illegal. So any employer who is paying basic salary of the employee less than the minimum wage of the state, that would be considered as a non-compliant thing. It will be considered illegal. So make sure that whenever you are designing a salary structure of an employee, you need to keep the basic salary of the employee either equals to or less than the minimum wage of that state. Now, from this factor of the minimum wage, the question comes up. Here is a question we are having. The question is why unskilled labor in Bihar is getting less salary than the unskilled labor working in Delhi. What could be the possible reason that the unskilled labor who is working in Bihar is getting lower salary, lower wages than the unskilled labor who is working in Delhi? What could be the possible reason? You guys can leave your answers in the chat box. You can leave your answer in the chat box, guys, for this question. What is the reason that the unskilled labor in Bihar is getting the less salary than the unskilled labor who is working in Delhi? So Niharika have answered cost of living, and the location, cost of. Yes, guys. Manavi have said the minimum wages of states vary. Correct. So the combination of all this cost of living, location, labor industry, and the unions, what we make the minimum wage. We decide the minimum wage. The combination by analyzing all these things, by analyzing the cost of living of the state, labor supply and demand in that state, then the labor unions and the industries which are active in that state. By analyzing all those things, the state usually decides the minimum wage. On the basis of that only, the answer would be that the minimum wage of the Bihar is less than the minimum wages of the metro city or the Delhi or Mumbai. Right. So that is the reason that the labor who is working in Bihar is getting the lower salary than the labor who is working in Delhi. Now, from this question only, the another question comes up is, what if the same person gets transferred to Karnataka? Now, if the same person who is working in Bihar gets transferred to Karnataka, now he'll start getting the increased minimum wages according to the Karnataka state's minimum wage, right? So this is the factor. This is the importance of minimum wage. And whenever you are designing the salary structure of an employee, always make sure that you are not paying the basic salary less than the minimum wage of that state. It is a very important thing. Now, coming to the next poll, we are having a poll here. This poll is a kind of survey we are having. This question we are having here is, question is, which is the must-have attribute to make someone the preferred choice during an interview? The options are communication skills, practical skills and knowledge, degrees and certifications. So I'm just launching this poll, guys. It's kind of survey, and you can provide your inputs for this question. The question is, what is the must-have attribute to make someone the preferred choice during an interview? The options are communication skills, practical skills and knowledge, degrees, and certifications. I'll stop this poll at 80%. Okay, reached to 82%. And the majority have answered that the practical skills and knowledge is very important, right? Rest 30% have answered communication skill, and only 3% have answered degrees and certification. Thank you for sharing your inputs, guys. I'm just ending this poll and let's move ahead with the topic. Now, there are three terms that almost all of us must have heard once in our lives, even though you are a fresher or do not have any connection with the HR, human resource. These terms are take home salary, net pay, enhanced salary, monthly salary of the employee, that we also know as the gross salary, and CTC, cost to the company. Now, we are going to understand all these terms in details in the coming slides. What does all these means actually? So let's first understand what is monthly gross salary. So the monthly gross salary is the total monthly earning of an employee. It is a monthly earning of an employee, and also the salary which is payable before any kind of deductions. When I'm saying monthly earning, means that is a portion of earning, the total earning of the employee from which there is no deductions has been done yet, right? So the payable salary before deductions, before any kind of deductions, whether it can be the statutory or any other deduction. So payable salary before any kind of deductions is known as the monthly gross salary of the employee. This is usually the total monthly earning of the employee. Second term we have is the net salary or the take home salary. What does it mean? And how do we calculate the net take home salary? So the payable salary after deductions. So monthly gross salary is the total earning of the employee. Now, from this earning, if you deduct the employee's deduction parts, those deductions can be statutory, such as PF, ESI, welfare fund, or TDS. So once you deduct all these things from the monthly gross earning of the employee, you reach to the net salary of the employee. So formula for deriving the net salary is monthly gross salary minus all employees deductions, right? So this is the payable salary after all deductions from the employee's monthly gross salary. Third term is the biggest term, that is called the cost to the company. As the name suggests, cost to company is the total amount a company is spending on employee. So total expenditure that an organization is making on an employee, that expenditure actually includes the total salary, monthly salary that the company is paying to that employee, plus all the statutory contributions or the benefits that the company is giving to that employee. So the combination of monthly gross salary plus the statutory contribution and the benefits that the company is giving to that employee, we reach to the cost to the company, right? So monthly gross salary is the total earning of the employee, right, before any kind of deductions. Net salary is the payable salary after all deductions from the employee's salary, and cost to the company is the total expenditure done by employers to their employees, right? That expenditure includes the total salary paid to that employee plus all the statutory plus benefits which are given to that employee. So these are the terminologies. We are going to understand the formulas and we'll apply all those things in the Excel also at the time of designing the CTC structure. Now this is the second last poll we are having here. So the question is, now this poll is again related to this only, CTC net take home and the gross salary. So the question here is, CTC cost to the company will be my net take home salary. Is take home salary is equals to CTC? So if this statement is true or false, you need to answer that my CTC will be my net take home salary. If this statement is true or false, I'm just launching this poll and please provide your inputs. My CTC will be equals to my net take home salary. If this statement is true or false, I'll stop the voting at 80%. Okay, we've reached 82%. All right, so the correct answer is false. The CTC can never be equal to the net take home salary of an employee. It will always vary because the net take home comes after all kind of deductions from the gross salary of the employee, and CTC is the total expenditure done by an employer on an employee, right? So that is why the correct answer is that the statement is false. I'm just launching, just ending this poll, and let's move ahead to the next slide. Now, let's understand how the compensation and benefit is designed. Now, let's suppose if your manager or your management have asked you to make a salary breakup of 20,000 rupees or 50,000 rupees. They have given you a CTC budget that the CTC is 50,000 and you need to design a CTC breakup, an effective CTC breakup for that 50,000 rupees. How do you do that? What are the steps that we need to follow and what are the things we need to consider at the time of designing a CTC breakup? So let's understand the steps and what are the things that we need to consider at the time of designing a CTC breakup. So the very first thing that comes at the time of designing a CTC breakup, CTC annexure, is to decide the fixed salary, or that we also know as a base pay of the employee, right? The very first step is to decide the fixed salary or base pay of the employee. That usually includes the basic salary and the dearness allowance if applicable. Dearness allowance if applicable, because in the private sector we do not use the dearness allowance frequently. This is a component that is usually widely used in the public sector, government sector, but in the private sector, we usually take the basic salary only. Right. So the very first step is to decide the basic salary of the employee. And what are the things we have discussed in the previous slides? That at the time of deciding, at the time of fixing the basic salary of the employee, we always need to check out the minimum wage of that state. And even by mistake, you should not provide the basic salary of the employee less than the minimum wage of the state. It should be either equals to or more than the minimum wage of that state. So this is the very first step uh, at the time of designing an effective CTC breakup to decide the basic salary of the employee. Once you have decided the basic salary of the employee, you need to decide the allowances. So we pick up the allowances as some portion of the basic salary only. We fix the allowances on the basis of percentages of basic salary only. Basic salary should be the biggest component in the entire CTC structure. Always make sure that. So second thing is to decide on the allowances that we are going to offer to that employee. The allowances can be house rent allowance, conveyance allowance, medical allowance, special allowance, entertainment, newspaper, telephone, internet, vehicle maintenance, and the fuel allowance. There are various allowances which are available that you can offer to your employee depending upon your company's policy and the employee's requirement. Right. Now, what are the things that we need to focus at the time of fixing the allowances for any employee? The allowances, we need to pick up those allowances first which are either tax exempted or partially taxable. So allowances should be either tax exempted or partially taxable. This is usually done by the employers to reduce the tax liability of an employee, right? For an example, when you are picking up a house rent allowance, how do you pick up a house rent allowance? The formula is that you take house rent allowance as 40% of basic salary for the non-metro cities and 50% of basic salary for the metro cities. Why 40%, 50%? Because for the non-metro cities, up to 40% it is tax exempted. For the metro cities, up to 50% the house rent allowance is exempted. Anything which is above 40 to 50% is taxable. So these kind of things we need to check at the time of picking up the allowances for our employees, right? So we are going to understand these things in detail also in the Excel file at the time of actual CTC and Excel preparation. So the first step was to fix the basic salary of the employee. Second step was to fix the allowances of the employee. Right? These two are the very important steps because these are the earnings of the employee. These are going to decide the earnings of the employee because the combination of this first step and the second step gives us the gross earning of an employee. Right? So first step is to fix the base pay. Second step to fix the allowances of the employee. Third step is to calculate the statutory contributions and the retirals of the employee. These usually includes provident fund, employee state insurance that we also know as ESI, gratuity and bonus, labor welfare fund, professional tax. These kind of statutory contributions we need to consider. And this is the step when we are calculating the cost to the company. Fourth step is if your company have benefits policies also, you need to mention those benefits also in your CTC annexure. These benefits can be medical insurance, life insurance, club membership, dental, vision, higher education, depending upon your company's policies. Then the last step could be the variable pay. If the position demands, if the position is somewhere around like marketing person or the sales guy, which have some targets, and your organization is giving them some incentive also. So the position is usually performance based, like they get the incentive on their performances. So they pay the variables also apart from their salary. So these are named as usually the performance link incentive, retention bonus, bonus on the company's performance, long-term incentive. These can be the form of variable pay. So at the time of designing a compensation and benefit structure, we need to usually follow these 5 steps. What are these 5 steps? The first step is to decide the base pay of the employee. That could be the basic salary of the employee. And at the time of deciding the basic salary, always consider the minimum wage of the state. Second is to fix the allowances. Whenever you are fixing the allowances of the employee, always consider the tax applicability on those allowances to reduce the tax liability of the employee. Third is to calculate the retirals and the statutory contributions on behalf of that employee. Fourth is the perks and benefits depending upon your company's policies. Fifth is the incentives and variable pay depending upon the position demand. If the position is sales or marketing profile or any profile which have some targets or achievement programs, right? So these are the 5 steps that we need to follow at the time of CTC designing. Now let's understand how do we actually calculate the gross, net, and the CTC. What are the formulas? So for the calculation of gross salary, the formula is very simple. Basic salary plus all allowances, we get the gross salary of the employee. Second, we have gross salary minus employee deduction. What will we get? We will get the net pay of the employee. Gross salary minus employee deductions. The deductions can be provident fund, ESI, labor welfare fund, TDS, or any other kind of deductions. Right? So gross salary minus employee deductions, we get the net pay of that employee. Third, we have is the CTC. How do we calculate the CTC of the employee? Gross salary plus employer's contributions. These contributions can be the PF, ESI, labor welfare fund. We get the cost to the company. Gross salary plus employer's contributions, we get cost to the company of employees. So these are the formulas that we usually need to follow at the time of designing the CTC breakup. And we are going to use all these formulas live also in the Excel sheet after some time. Now let's understand about some of the compensation models which are nowadays being used in the industries. These compensation models are the very first compensation model we have is the traditional compensation model. In this traditional compensation model, the companies have fixed salary structure with bands based on the employee's grade, and employee has no choice. So usually in kind of traditional compensation model, the company decides everything. They decide all the pay of the employee. They decide it's the basic salary and all the allowances of that employee as well. And there is no choice left to the employee to decide or to pick up the allowances or any of the wage form on the basis of their expenditures, right? So this kind of compensation model is known as the traditional compensation model. In the next few slides, we are going to check out some of the examples of these models also. Right, so this is the very first that is called the traditional model in which the employee has no choice, employer fix everything. Second is the flexible compensation model. Employee has the flexibility to choose salary component from the basket of components offered by the company. So in this flexible compensation model, usually the company only decides the base pay of the employee, fixed salary of the employee. And for the allowances, they leave the decision on their employee. So they fix up some amount for the allowances, and they allow the employees to pick up the allowances on the basis of their expenditure and on the basis of their choices from the available basket of allowances which is being followed in that company. So this kind of compensation model is known as the flexible compensation model. Third compensation model is the combined. As the name suggests, this is a combination of traditional and the flexible compensation model. So for an example, let's suppose the company have decided basic salary also and around most of the other allowances also, right? And they have left only one or two allowances to be picked up by the employee. So in that case, around 70% of the pay is decided by the company, and for rest 30% they can ask the employee to pick up the allowances from the available basket. So this kind of compensation model is known as the combination of traditional and the flexible compensation model. Now let's understand some of the examples of the traditional and the flexible compensation model. So here if you see, basic salary is decided, HR is decided, mobile internet allowance is decided, office wear allowance is given. So it means that the company have decided basic salary also and all the allowances also. And here the employee has no choice to pick up any of the allowances depending upon their expenditure so that they can save some taxes, right? So this kind of a compensation model is known as the traditional compensation model, where the company fixed everything and employee has no choice. Now this is the flexible compensation model example. If you notice here, the company have fixed the basic salary as 25,000, and for rest of everything, rest of all allowances, they have given a sum amount of 35,000 rupees and named it as a flexi compensation model. And they have given these many choices to the employee that you can pick up your allowances from these available flexi components. Now, this kind of compensation model where the employee can pick up their salary part from the available components is known as the flexible compensation model, where the employee also have some choice to decide their wages or salary, right? So that they can save some of the taxes and depending upon their expenditures, right? This kind of compensation model is known as the flexible compensation model, where the employee has the freedom to choose their flexi components. Now let's understand some of the actual compensation annexures, some of the actual offer letters, and let's understand their CTC annexures, right? So if you see this slide, on the left side, we have a compensation model where everything is decided. So if you see above the gross salary, basic, HRA, CT, compensation, allowance, LTA, bonus, everything is decided by the company. There is no choice for the employee to pick up any of the allowances on the basis of their expenses. But it is a good example of complete compensation and benefit structure. How come? If you notice here in this red box, the company is giving these many benefits to this employee apart from this CTC, right? They are giving the travel reimbursement of 5,000 rupees. They are giving the maximum performance like incentive of 66,500 rupees. And they are also saying that maximum performance linked bonus can be 2 lakhs and 66,000 rupees annually. They are giving them the one-time relocation and the settlement reimbursement of around 30,000, right? So these kind of benefits they are paying over and above the salary of the employee. Then in the blue, they are saying that there will be an additional monthly deduction toward the mediclaim insurance as per the mediclaim policy offered by the company. So one thing that is noticeable here, that is the net take home salary, which is mentioned over here, is not the final take home salary of the employee. There would be a further deduction from this net take home salary because they are deducting the mediclaim insurance premium from the employee's salary only. So these things are important to study in the CTC annexures of the employee. Now on the right side, what kind of compensation model is this? So this is, you can say, is a combination of flexi and the traditional model. How come? You must be saying that basic and all the allowances are already decided. There is no choice for the employee. No, so there is the choice the company has given to this employee. If you notice here in this red box, they are saying that they are giving the option for LTA, leave travel allowance. They are asking the employee whether you want to take this leave travel allowance on monthly basis with your salary, or you want to claim LTA as a reimbursement at the time of actual expenditure. So this kind of option the company is giving to this employee, that you want this amount with your monthly salary or you want to take this as a reimbursement. So this is a combination of flexi and the traditional model, because for an allowance of leave travel allowance, they have given some freedom, some option to the employee to pick up. Now, on the left side, if you see this annexure A, now this annexure A is a perfect example of flexi compensation model plus a complete CTC compensation and benefit structure. It is a good example of flexi compensation model plus a complete compensation and benefit structure. Let's understand how. So if you see here, the company have decided basic salary of the employee, and for the rest of all allowances, they have named a component called flexi compensation, and employee have the freedom to pick this 5 lakh and 8,000 rupees from the available options of allowances that the company is giving to this employee. So this is a good example of flexi compensation, because company have fixed only the basic salary for the employee. They have decided only the basic salary of the employee, and for the allowances they have fixed an amount, and what allowance that need to be given to the employee will be decided by the employee only, right? Now how come this annexure is a good example of complete compensation and benefit structure? So when I say a good example of compensation benefit structure, that includes whatever benefits the company is paying should be over and above the CTC that has been offered to the employee, right? So if you notice here in this red box, the company is saying that in addition to the above, you will also be eligible for the benefit. So it means the CTC of this 10 lakh rupees, or whatever he is getting as a CTC of 10 lakh, over and above of this 10 lakh, the employee will also get all these benefits which are mentioned here. These benefits are Mediclaim policy, then they can avail the additional top up for the Mediclaim policy. They have a group personal accident insurance, group term life insurance. Then one very important thing, that they have not made the gratuity scheme as a part of CTC. They have kept it in the benefits section, which is a very good thing, right? So this annexure A is a very good example of flexi compensation model plus the complete compensation and benefit structure of an employee. Right, on the right side again, this is a traditional compensation model because everything has been decided by the company, but it is a good example of compensation and complete compensation benefit model. How come? Because all these benefits which the company is giving to this employee are additional to the total gross salary or the CTC they have decided for the employee. Now, on this slide, there is some problem. So these two CTC annexures are not a good example of CTC annexure, not a good example of complete compensation benefit. How come? Let's understand that. So this first one, if you see, now this is an example of flexi compensation model, but it is not a good example of good compensation and benefits model. Why so? Because if you notice, this component is named as base salary, and this base salary also includes provident fund and gratuity of the employee, which can never be done, right? Provident fund and gratuity can never be the part of base salary of the employee. These are the kind of benefit or the statutory contribution that the employer is making on behalf of that employee. Either making it under basic salary of the employee, they can put it as the part of CTC, the employer's contribution category, and they can make a component called the CTC, cost to the company, right? So we will understand this in the coming slide. If you see here, we have made some correction for this CTC annexure on the right side. So basic HRA and the ad hoc allowance. Till this component, you can name it as gross salary, and for the rest other things like provident fund, gratuity, you can keep them in the employer's contribution section, and you can name it as the CTC, including this CTC may include the annual variable of that employee as well. So you can write these kind of annexures this way, but this is not at all a correct way to design a CTC structure of an employee, right? So designing a CTC structure is a very important part uh, for offering the employee, right? So we'll understand all those things in Excel as well, and we'll understand and we'll apply everything which we have learned till now. We'll apply in the Excel also at the time of designing the CTC annexure of an employee. So for that purpose, let's move to the Excel sheet, right? So I hope my Excel is visible. Anu sir, is my Excel is visible?
Yes, it is.
Okay. So now to understand how do we actually design a compensation model. So here I'm not going to add in the benefits. We'll only design the CTC part of the employee, right? Which includes money, the compensation part of the employee. Now, for an example, let's suppose your company have asked you to design a CTC breakup of 20,500 rupees. How do you do that? What are the steps that we need to follow? So the steps that we have just understood in these slides, we are going to apply those steps only in this Excel as well, right? For the designing of complete CTC structure. Now for the designing of complete CTC structure, I'm just following this basic format that you can have. The format includes gross salary. Gross salary includes the basic salary and the allowances of the employee. Then we have employer's contribution section. The gross salary plus employer's contribution, we get cost to the company. Then we have employee deduction section. Gross salary minus employee deductions, we can reach to the net pay of the employee. Right? Now let's design this structure for this 20,500 rupees. So what was the very first step to design a compensation model? The very first step was to decide the basic salary of the employee, to fix the basic salary of the employee. Now there are two things that need to be considered at the time of fixing the basic salary of the employee. The first and very important thing is to check out the minimum wage of your state for that scheduled employment. Whenever I'm saying scheduled employer, we need to check the category of the employee, whether the employee is falling in the category of unskilled employee, semi-skilled employee, or the highly skilled employee, right? So the first thing is to check out the minimum wage of the state according to the category in which the employee is falling. And the second thing, if you are complying with the minimum wage of the state, you can go for 40 to 50% of the CTC as well. Now, why 40 to 50%? So there is no law that is saying that you should take basic salary as 40 to 50%. This is something which is universally accepted, and usually almost every industry is following this 40 to 50% of criteria for the fixation of basic salary. Right, you can go below 40% also, and you can go more than 50% also, but always remember that this basic salary is a fully taxable component. So the higher the basic salary will be, it will attract more tax for the employee, more tax liability for the employee. Higher the basic salary will be, it will attract more cost for the employer as well, because all the statutory contributions that we make apart from the ESI usually uh, uh, are calculated on basic salary of the employee only, right? So fixation of basic salary is very important, right? So now let's calculate the basic salary of the employee. Now let's consider that this employee is living in a non-metro city, right? For an example, this employee for whom we are making this CTC structure, this employee is living in a non-metro city and working in a non-metro city only. And what is the criteria for the fixation of non-metro city? With this non-metro will be applied for the house rent allowance. So you can take up 40 to 50%. I'm taking this basic salary as 50% of the monthly CTC that we have offered to the employee. And also one very important thing, that the basic salary should be the highest component in the entire CTC structure, right? So we are taking basic salary as 50% of the CTC of the employee. Press enter, and the amount we have got is 10,250 rupees. Considering that this 10,250 rupees is complying with the minimum wage of the state, it is either equals to or more than the minimum wage of that state, right? So that's how we fix the basic salary of the employee. At the time of fixation of basic salary, these things are very important to consider, that the minimum wage of the state, you need to consider the tax liability of the employee, you need to consider the employer's cost as well, right? So this is the first step to calculate the basic salary of the employee. Once you are done with the fixing the basic salary of the employee, the second step is to fix the allowances for the employee, right? Now, like I said during the presentation, that at the time of fixation of allowances, always check the tax applicability of those allowances. These allowances can be, you should always try that these allowances should be either completely fully tax exempted or can be partially tax exempted, right? So for an example only, I have taken these three kind of allowances. These are house rent allowance, telephone allowance, special allowance. House rent allowance is tax exempted up to 40% for the non-metro city and up to 50% for the metro city. So we are going to take, as we have said, that this employee is living in a non-metro city, so we are going to take 40% of basic salary as the house rent allowance. So basic salary multiplied by 40%, we can calculate the house rent of the allowance of the employee. Now, telephone allowance. What is the tax applicability of these kind of allowances? These are exempted on the actual expenditure incurred by the employee, right? So whatever amount you have fixed for these kind of allowances, they will be only exempted up to the actual expenditure done on this allowance, right? So now how do we fix this allowance? There is no rate or nothing given by the Income Tax Act for the fixation of this kind of allowance. So for that purpose, you should always consider some realistic amount, right? So somewhere around 10% of basic salary will work for this kind of allowance, right? So basic salary multiplied by 10%, we get around 1025. That is somehow a reasonable amount for the telephone expenditure, telephone allowance, right? 1025 rupees. Next allowance we have is the special allowance. Also, again, let me tell you that special allowance, other allowance, these kind of allowances are completely, fully taxable in nature. Till the time you are not specifying a complete name for allowances, or you are naming it as special allowance or the other allowance, it would be fully taxable. So for now, I'm just going to keep the special allowance cell blank, right? Why I'm doing this? I'm going to tell you about this, that why I'm keeping the special allowance cell blank, because I want this cell to be the adjusting cell. So when I'll calculate the CTC amount, it should match the what we were looking for, this 20,500 CTC we were looking for. So after the calculation, this CTC amount should match this figure. So if it is not matching this figure, we need to do some adjustment in this salary structure. So for that purpose only, I'm keeping this special allowance cell as blank, right? So let's suppose that we have decide the basic salary and all the allowances of the employees also. We are going to fix these special allowance later on, but for now we are considering that basic salary and all the allowances of the employee has been calculated and decided. So what we can do now, we can calculate the gross salary of the employee. What is the formula for the calculation of gross salary of the employee? The formula is sum of basic salary and allowances, we get the gross salary. So it means sum of all above, we will get the gross salary of the employee, right? So once we have calculated gross salary, we can move to the other part, that is the statutory contributions calculation, right? Now, to calculate the cost to the company, what is the formula? Formula is gross salary plus employer's contribution in the statutory area, or the benefit that the employer is giving to the employee, right? So it means that we need to calculate the statutory contributions here, employer side of statutory contributions. So those statutory contributions can be provident fund, ESI, labor welfare fund, right? But labor welfare fund is something which is not applicable in pan India. It is a state applicability. In some states it is applicable, in some states it is not applicable. So that's why I have taken PF and ESI only, because PF and ESI is something which is applicable everywhere in pan India, right? So first we are going to calculate the PF of this employee. Now, what are the things we need to consider at the time of calculation of provident fund? What is the rate of contribution of employer in PF? The rate of contribution is 13%. Now you must be saying that it is 12% employer and 12% employee. Yes, it is 12 plus 12%. But the employer expends extra 1% for an employee, right? This extra 1% goes 0.5% in the EDLI and 0.5% in the PF admin charges, right? So total expenditure that an employer is making for an employee in PF is 13% of the PF wages. Now, what is PF wages? PF wage is the amount on which we are calculating the PF contributions. Earlier, we used to calculate PF on basic and DA, but now we used to calculate PF on either gross salary or gross minus HRA, capping it to maximum 15,000. When I'm saying capping it to maximum 15,000, means that we are limiting our PF cost at maximum 15,000 rupees, right? Let's understand by applying some formulas here in the PF of the employer. So I'm just going to add a round first so that we can avoid the decimals, and I'm going to use the if function. In the if function, I'm going to put a logical test, and for that logical test, I want two outcomes. First outcome, if the logical test is true. Second outcome, if the logical test is false. So what logical test I'm going to put in here? The logical test that I'm going to put in here is that I want to limit my cost at maximum 15,000 rupees. I do not want to contribute PF on PF wages which are more than 15,000 rupees. I just want to limit my PF contribution at PF wages maximum 15,000 rupees. So I want to use this criteria as a logical test over here, right? So for now I'm considering the gross salary as PF wages, and I'll limit my PF contribution at maximum 15,000. So I'm just going to apply this as a logical test. So if the gross salary of the employee, PF wages of the employee, is more than rupees 15,000, PF wages of the employee is more than rupees 15,000. In that situation, means the logical test is true. It means I want to limit my contribution at maximum 15,000. But if the logical test is false, when the logical test is false, that is the scenario of when the PF wages is either equals to or less than the minimum, less than the PF wage, less than the 15,000. So in that situation, I want to contribute on the actual PF wage of the employee, right? First outcome, when the PF wage is more than 15,000, in that situation, I have limited my contribution at 15,000 rupees. Second, if the PF wage is either less than or equals to rupees 15,000, in that situation, I want to contribute at the actual PF wages of the employee, right? Bracket close. Now, what is the rate of contribution of employer? It is 13%. 13%. Since we have added round in the beginning, we need to add comma 0, enter, and we have calculated PF contribution for employer successfully. Second thing is the ESI, that is the employee state insurance contribution, right? For that, what are the criteria we need to consider? The criteria we need to consider is the rate of contribution and the eligibility. We contribute for those employees only who are eligible in ESI. Those who are not eligible in ESI, we do not need to contribute the ESI for those employees. Same applies for PF as well. But for the understanding of eligibility criteria of PF, we need to go with the entire session of PF. There is a huge discussion on that part. Now, for the ESI, we need to first check the eligibility of the employee, whether the employee is eligible for the ESI benefit or not. What is the eligibility criteria? Any employee whose basic salary, whose gross salary, monthly gross earning is less than or equals to rupees 21,000 is eligible for ESI. Those who are earning gross salary more than rupees 21,000 are not eligible for ESIC. Hence, we do not need to contribute for those employees as well. Now, what is the rate of contribution for an employer? It is 3.25% of the monthly gross salary. Now, we are going to apply these things in the formula and we'll calculate here. Right. So again, I'm going to add in the round to avoid the decimals. Then we'll add the if function. Again, if function is a logical test with two outcomes. First outcome is the logical test is true. Second outcome is the logical test is false. So what is the logical test we are going to put in here? We are going to put in the eligibility criteria as a logical test because we do not want to contribute for those employees who are not eligible for this benefit, right? So what is the eligibility criteria? That the gross salary of the employee should be either equals to or less than rupees 21,000. Those who are earning more than rupees 21,000 are not eligible, right? So if gross salary of the employee is more than rupees 21,000, and if this criteria is true, if this test is true, it means I want the contribution to be zero because those who are earning more than rupees 21,000 as a gross salary, those employees are not eligible in ESI. And we do not need to contribute for those employees in ESI either, right? Second outcome, if the logical test is false. So if the logical test is false, means the gross salary of the employee is either equals to or less than rupees 21,000. In that situation, the person is eligible and we need to make the contributions also. And the contribution will go on the actual gross salary of the employee. So pick up the gross salary, close the bracket and put in the rate of contribution of employer. What is the rate of contribution of employer? It is 3.25% of the gross salary. Since we have added round in the beginning, add comma 0 in the end and close the bracket. Enter. We have calculated the employer ESI contribution as well. Since we have already calculated gross salary and the employer's contribution, now we can calculate the CTC of the employee. What is the formula for the CTC? The formula is gross salary plus employer's contribution. We can calculate the CTC, right? So apply that formula. Gross salary plus sum of employer's contributions, we get CTC. We have calculated CTC of the employee also. Now you notice that the CTC that we have calculated is not at all equal to what CTC we were looking for. Or now for that purpose only, we have kept this special allowances cell blank for the adjustments of the differences. Right, but for doing that, before moving to the special allowance cell, we'll just calculate the deductions parts also, and we'll calculate the net pay of the employee also. Just input the formula, then we'll move to the special allowance cell so that we can compare the CTC with the exact CTC what we were looking for. Right. So the next we have is the employee deduction area, in which we need to add in the same kind of contribution as a part of employee's deduction, which will be deducted from the gross salary of the employee. Right. So again, for the PF employee part and ESI employee part, we need to input the formula, right? But you do not need to type in the lengthy formula. You simply go to the employer cell, click F2, copy entire formula, come back to the employee cell, PF employee contribution, paste the PF employer formula, simply change the rate. Employee's rate of contribution is 12%, right? Simply change the rate, press enter. You have calculated PF of employee as well. Will they do the same thing for ESI also? Copy the ESI formula from the employer cell, come back to the employee cell, paste the formula, change the rate of contribution. What is the employee's rate of contribution in ESI? It is 0.75%, right? We have calculated the ESI of employee as well. So it means that we have calculated the deduction parts of the employee that will be deducted from the gross salary of the employee. So once we deduct the employee's contribution from the gross salary, we will get the net pay. So simply add in this formula: gross salary minus all employees deductions, we get the net take home salary of the employee. So for now, we have just added a framework of formulas in this compensation model. Now the task is to reach to the amount with what we were looking for. We were looking for a monthly CTC of 20,500. Now, for that purpose, we have kept the special allowance cell blank. But the amount we have got in the CTC is not equals to what we were looking for. So for that purpose, we just first check the difference. What are the difference we are getting here? So the difference is of sorry, so the difference we are getting here is the outcome we were looking for and the outcome we have got is this amount. Press enter. It is 2,675 rupees. Now let's try. If we enter this 2,675 amount in the special allowance, do we reach to this 20,500 amount? Let's try this. 2,675. Press enter. No, it's still not matching what we were looking for. Now it's asking to reduce rupees 87 from the special allowances. Let's try that. Minus 87. Enter. Still not the same what we were looking for. Now it's saying to add rupees 3. Again, let's try that. Plus 3. Finally, it reaches, the difference is 0 now, and we have reached to the outcome we were looking for. Finally, we have calculated CTC, what we were looking for, right? But if you notice here in this part of the calculation of special allowance, we struggled to reach to the exactly what we were looking for. We did some manual additions and subtractions in this cell. Now, to avoid these steps, we have designed a CTC calculator, right? This is the CTC calculator in which we have incorporated formulas in each cell depending upon their applicability, statutory liabilities depending upon the law. We have incorporated formulas in each cell. There is no cell which is blank apart from the basic salary because I want this basic salary to be the calculation factor, right? I just want by using 2-3 steps we can reach to desired CTC amount we were looking for, right? So let's try that. How do we do it? So in this Excel we have an option here is called data. Just go to data. In that data you'll find an option of what if analysis before the forecast sheet. So just click on what if analysis. In what if analysis we have goal C. Now this is the function that we are going to use to reach to the desired CTC amount that we were looking for, right? So let's suppose I am willing to calculate a CTC structure of 50,000 rupees, and this cell is asking me three things. Set the cell where you want your outcome. So we want to calculate the CTC, right? And this is the cell which is representing CTC, that is C12, cost to the company. So I have just assigned that cell C12 as the outcome cell where I want my outcome of CTC. To value, what value I'm looking for? I'm looking for a 50,000 CTC, right? By changing the cell. So I want to assign the basic salary. I want to make this basic salary as being the calculation factor, that all these allowances will be calculated on the basis of basic salary only, and press OK. Now see the magic. Done. We have calculated the CTC structure of 50,000 rupees by just one click. Now let's try some other examples as well, right? Now this time I want to calculate a CTC an extra of 80,000 rupees. Let's try to calculate the CTC an extra of 80,000. I have assigned the cell where I want my outcome value. We are looking for 80,000. By changing cell, I want to assign the basic salary, right? Click OK. Now see the magic. It's done. It just took some seconds only to calculate the 80,000 CTC. Now let's try some odd figure, the kind of CTC amount that we usually do not offer to the employee, that are very rare in nature. And let's try if this process can calculate that as well. So first need to assign the CTC that we were where we want the outcome. Provide the value. So let's try the value of 1,98,765. 1 lakh I think I've increased one value. Yeah, so we are looking for a monthly CTC of 1,98,761 rupees. This is a kind of odd figure that you usually not find. Right. So let's suppose if let's try if this can calculate this CTC also by changing cell. I want basic salary to be the changing factor. Click on OK. Now see, done. See the adjustment being going on, and it's calculated finally the amount we were looking for. It's that simple. You need to do the hard work once only by incorporating the formulas in each cell, and after that this calculator will do all the job for you. Right, this is a one time thing that you need to do, and after that you will be able to calculate the CTC structure in like seconds. Right, now based on this kind of structure only, we have calculated a bulk CTC structure. We have created this bulk CTC structure. Now let's suppose you have to generate multiple offer letters with these CTC annexures. You have to release somewhere around 100 offer letters at the same time, and you need to calculate the CTC annexure as well for those employees. How do you do that? For that purpose only, we have created this bulk CTC annexure, and you can link this bulk CTC calculator with the mail merge, and you can create multiple offer letters with the CTC annexure of the employee. Then in our actual classes, we do tell about the monthly payroll processing, considering all the real life scenarios, considering the overtime of the employees, considering the arrears, reimbursements, loans, debits, TDS, and all kind of statutory deduction areas. Considering all those factors, we teach how to process a monthly payroll in Excel, and this Excel is also fully automated. You just need to provide the paydays every month over here, and this entire payroll will be calculated automatically. That we are going to learn in the actual sessions of this course. Then we have a dedicated session for TDS tax, right? We have an entire 1 day session of 2 hours and 30 minutes for income tax, in which we tell about the important sections of the income tax. How do we calculate the income tax? How do we design an automated income tax calculator? There are two tax regime nowadays, and how do we pick up the most effective tax regime for an employee? All those things we discuss in the tedious session of our course. We discuss about the full and final settlement. How do we calculate the full and final settlement? How do we design an automated full and final settlement calculator as well? Right. So these are the things we do in the actual sessions of this course in the compensation and benefits part, apart from all those two modules. So we are done with today's session, and in this today's session, we have discussed what things we have discussed. We have discussed what is compensation benefit, how it is designed, which are the components we need to consider at the time of designing an effective CTC structure. Then we had an understanding of some of the actual offer letters, and we did a live annexure preparation in Excel as well. Now this is the last poll we are having over here now related to this CTC designing only. So the question here is, a compensation structure should address which of the following objectives? Options are compliance with labor laws, less burden to employer in terms of cost, less tax liability, and more in hand for the employees, all the above. What are the important factors we need to consider at the time of designing a compensation structure of the employee? I'm just launching this poll. Please provide your input. This is the last poll we are having, and then post that, we'll move to the course details and the question answer sessions. Poll is live, guys. I'll stop this poll at 80%. We have received 34, 36, 39. This is the last poll, work, guys. I want everyone to vote for this question. What a compensation structure should address which of the following objectives? Options are compliance with the labor laws, less burden to the employer in terms of cost, less tax liability, and more enhanced salary for the employees, or all the above. Okay, so we have got around 76% of votes now. I think I need to stop the polling. So yes, guys, and most of the attendees have answered for option D. That is all of the above. 67% have answered for all of the above. That is the correct answer. All these three factors are the important factors that we need to consider. All these three factors are important factor at the time of designing a compensation structure of an employee. You need to consider the compliance with the labor laws. You need to consider the less tax liability for the employee. Also, you need to consider the lesser cost for the employer as well. All these things are important, right? So So for today's session, today's the demo session, we are done. Now we are open for the question answer session. You can unmute your mics, you can ask your questions. And these are the three modules that we offer during our course in the entire course. These are some of the appreciations that are shared by our students. Now, this is the sample certificate that we share with our students post the completion of the course. That is called the certificate of completion. There are some more appreciations. These are the webinar. This is the webinar we have done in Aligarh Muslim University. This is the webinar that we have done in a college, management college, that is Sri Siddhivinayak College. These are some of the testimonials given by some of our ex-students. So these were the appreciation that are shared, and there are multiple appreciation and testimonials shared by the students. We are sharing very few with you guys. These are the course details, and anything which is related to today's topic or the course, you want to ask anything, please feel free to ask. You can unmute your mics and you can ask your questions now. We are open now. Any questions, guys?
Since when the classes would be starting?
See, guys, you can enroll on any Saturday you want, because every Saturday we start a new session, new topic. Every Saturday we start a new topic. So on any Saturday you can enroll yourself, and within a span of 1 month and a week, you will be able to complete the entire course, irrespective of which module you have started with. Right, this course goes in a cyclic way. Even though if you will start from the recruitment and selection, that is the module 3, you would be able to complete your entire course in the same span of time, because it goes in cyclic. So we enroll new students on Sundays also, Saturdays, and existing students also completes their course on this Saturday. So enrolling and leaving goes on the Saturdays.
Excuse me, sir, what are the charges?
Yeah. See, for all these three modules, if you want to go for all these three modules, the charges are very low. That are only rupees 3,500 rupees. That is a discounted price. If you want to go for one, two module separately, the charges would be around 1,500 rupees for each module. Right. That makes around 4,500. We could give a further discount of 1,000, and the final charge becomes 3,500 rupees only for the entire course.
For the entire course, 3,500.
Yes, yes. The total duration would be of around 1 month and a week, and total sessions are 10. Like the statutory and compliances takes 5 sessions, compensation benefits takes 3 sessions, recruitment selection takes 10 sessions. Right. So the total course consists 10 sessions. Each session is of 2 hours and 30 minutes. We conduct classes on Saturdays and Sundays only, weekends only. Timings are 4 p.m. to 6:30 p.m. So minimum of 2 hours and 30 minutes we conduct the session every Saturday and Sunday. Right, we provide dedicated study materials for each topic post the session of that topic. We provide the recordings for each
Hello?
topic. Yes, please.
Yeah, I need to check from where we'll get the link to register ourselves.
You just need to contact them at any of the below numbers. The first number belongs to me, and the second number belongs to Mr. Anil sir. Right, so
Okay.
you can contact us on any number, and
Mm-hmm.
there will be details related to the enrollment. Right.
We,
Oh,
we would be sending you today's recording by 9 or 10 p.m. today, and along with that mail, course detail would also be there. All those people who are interested to enroll, we would be sending payment link and other detail on one-to-one basis. But
okay, okay.
as far as today's recording is concerned and course detail is concerned, that we would be sending to each and everyone
Okay.
by tonight,
Yeah,
and
okay.
the classes are starting from Saturday. Classes happens only on Saturday and Sunday. The duration of class is 2.5 hours. 2.5 घंटे की class होती है. The timing is 4 p.m. to 6:30 p.m.
Yeah, that will be fine.
Apart from giving study material on each and every topic, we also share the classroom recordings. So
Okay,
whenever
and one more thing, doubt class is also there after classes.
the entire 2.5 hour,
Yes.
1 hour goes into doubt clarification only. Uh,
Okay.
we have shared the link of YouTube channel. There are few live videos uploaded there. You can have you feel how the actual classes is happening. जैसे ही हम
Okay.
लोग class start करते हैं, the question answer starts. So you would be
Okay.
able to if you would be able to hear what other people are asking, and you can also understand or you can put your questions as well. So
Okay.
visit the YouTube channel. They will find few live class recordings. So what I was telling, we provide study material on each and every topic. We also give classroom class recording, and then there is a certificate at the end of course, which is ISO 9000 certified. And enrollment is not that difficult. Anybody who makes the payment gets enrolled in the course. And as I said, this class will start from this Saturday, which is 10th of October.
Hello, I have a query.
Yes, please.
I basically want to know what other courses you have apart from this. For example, I want to get into policy formulations and training and developing content from the training and development in the organization. So do you have any course related to that?
Currently, we have this course only. We will take some time to launch another course, which will include performance management system, HR analytics, OD, and the policy you are talking about. That will take we will
Okay.
take some time to launch that course. But at this point of time, this is the only course which we have.
Okay. You.
Hello.
Yes, please.
Hello.
Yes, please.
Yes. What is the payment procedure of your courses?
Payment can be made through multiple channels. You can transfer to company's account. You can pay through
Hmm.
wallet and credit card. There is payment link. There are
Hello.
there are multiple channels. You can transfer to our company account. We have
Hmm.
PayU and Razor Pay method through which you
Hmm.
can pay use by using your wallet and credit card. And then we
Okay.
have Paytm and Google Pay as well. So
Okay. Okay.
in terms of payment possibility, you will find all sort of channels we have.
Okay. Okay. And sir, today's classes details. Would you share the PPT of with us through mail or any?
PPT, we would be sending
Or
the recording.
okay. Okay. Okay.
But
Okay, sir. No
whatever
problem.
class, whatever we have shown today
Hmm.
in PPT and whatever we have discussed and Veera sir has
Hmm. Hmm.
shared,
Hmm. Hmm.
the entire recording we would be
Okay.
sharing.
Oh. Okay. Okay. Okay, sir. Okay. Thank you. Thank you.
Thank you. Any more questions?
Any further questions, guys?
Please feel free to join our YouTube and LinkedIn pages. If you do not have any questions, we can close for today. The first number belongs to Dheeraj sir, who has taken you through the entire PPT. The second number, 5 times 9 wala number, is my number. You can speak to us, you can call us, and you can WhatsApp us also. We would be available to respond to your queries. And you can take a picture of this slide so that all detail remains with you. And we would also be sharing the recording of today's class. So Dheeraj, I guess people are clear. They do not have any queries.
Yes, sir. Yes.
And before we close, let us thank you for your patience. You people were really nice audience. We had a very good session. Thank you for joining. Thanks for your time. Take care, be safe, and we would be sending the mail by 9 or 9:30 p.m. today. Thank you, everyone.
Thank you.
Thank you, guys.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.